How the Opium Wars shaped global finance when trade became a weapon. The Opium Wars 1839 to 1842 and 1856 to 1860 were not just military conflicts between China and Britain, they marked a turning point in global financial history. What began as a dispute over trade and sovereignty evolved into a fundamental transformation of international commerce, monetary systems, and the balance of economic power between East and West. The silver drain and the roots of conflict. In the 18th century, China's economy was the largest in the world, and it operated on a silver-based monetary system. Western nations, particularly Britain, were eager to buy Chinese goods, tea, silk, and porcelain, but China had little interest in foreign imports. The result was a massive outflow of silver from Britain to China, creating what economists now call a trade imbalance. By the late 1700s, the British East India Company began exporting Indian opium to China in exchange for silver. This illegal trade reversed the silver flow. Instead of silver going to China, it started flowing back to Britain. The Qing government recognized this as a threat to both its economy and sovereignty. Silver was the backbone of China's tax and currency systems. The Opium Wars, from trade to empire. When Chinese official Lin Zhaoxu confiscated and destroyed opium in Canton, Guangzhou in 1839, Britain retaliated militarily. The First Opium War resulted in China's defeat and the signing of the Treaty of Nanking 1842. The first of many unequal treaties. China was forced to open ports, cede Hong Kong, and pay large indemnities in silver. This was not just a geopolitical loss. Economically, China's silver reserves were drained, undermining its currency stability. The Qing dynasty had to borrow heavily and impose new taxes to pay reparations, which weakened both domestic demand and imperial authority. Financial consequences: the global silver cycle. The wars reshaped global financial flows. China's dependence on silver tied its fate to the international bullion market. As silver prices fluctuated, often manipulated by Western powers, China's economy experienced inflation and deflation cycles that it could not control. Moreover, Britain's victory solidified the dominance of the gold standard in global trade. While China remained on a silver standard until the early 20th century, Western nations moved toward gold, making silver-based economies increasingly isolated. This monetary divergence deepened China's integration into the Western-dominated global system, but as a subordinate player. The rise of treaty ports and capital flows. After the Opium Wars, more than 80 treaty ports were established across China, where foreign powers controlled trade, finance, and even local taxation. These ports became gateways for Western banks, insurance companies, and trading houses, introducing modern financial instruments but also undermining Chinese sovereignty. Shanghai, for example, became a financial hub dominated by British and later American capital. This opened China to foreign investment and debt, creating the foundations for a semi-colonial economy. Lessons for modern financial history. The Opium Wars illustrate how monetary systems, trade imbalances, and political power are deeply intertwined. Control over currency and trade routes was and remains a form of geopolitical influence. China's experience shows how dependence on a single commodity, silver, opium, or later, foreign capital can expose a nation to external shocks. Similarly, the imposition of unequal treaties and indemnities resembles the debt diplomacy seen in later centuries. From Latin America to Africa, the birth of modern global finance. The aftermath of the Opium Wars laid the groundwork for a new world economy. With the forced opening of Chinese ports, Western powers gained not only access to trade, but also to financial penetration. The establishment of foreign banks such as the Hong Kong and Shanghai Banking Corporation HSBC in 1865 marked a pivotal shift. Financial institutions became instruments of imperial expansion. HSBC and other colonial banks facilitated international payments, managed silver and gold exchanges, and provided loans to governments and merchants. In doing so, they tied Asian markets to London's financial system, effectively globalizing monetary flows under Western control. This period also witnessed the emergence of international credit networks. Bonds issued by foreign powers or Chinese authorities were traded in European markets, signaling the dawn of a truly interconnected world economy, albeit one dominated by Western capital. Monetary imperialism and the shifting balance of power. The Opium Wars were the beginning of what historians call monetary imperialism. Control over money, exchange rates, and access to credit became tools of domination. Britain's global network of banks, insurers, and merchants ensured that trade, even in China, was settled in pounds sterling, not local currencies. This control over currency gave the British Empire a structural advantage. It could finance wars, manage debt, and extract wealth from colonies without direct military occupation. In contrast, nations like China and India became subject to financial dependency, as their economies were tied to foreign exchange systems and fluctuating silver prices. By the late 19th century, the shift from silver to gold standards effectively excluded China from mainstream global finance. The depreciation of silver reduced China's purchasing power and worsened its trade deficits. Meanwhile, Japan's early adoption of the gold standard after the Meiji Restoration, 1868, allowed it to integrate with Western markets, setting the stage for its rise as Asia's new financial power. A legacy still felt today in many ways. The Opium Wars serve as the origin story of modern globalization, one written not through cooperation but coercion. They demonstrate how control over financial systems can shape empires and define global hierarchies. Today, echoes of that legacy persist. China's contemporary efforts to internationalize the renminbi RMB, establish institutions like the Asian Infrastructure Investment Bank AIIB, and promote trade through the Belt and Road Initiative all reflect an enduring desire to reclaim monetary independence lost during the 19th century. Financial history teaches us that money is never merely a medium of exchange. It is a reflection of power, trust, and sovereignty. The Opium Wars remind us that when trade, finance, and empire intertwine, the outcomes can reshape the world for centuries. The ripple effect across Asia. The Opium Wars were not confined to China. Their consequences rippled across the entire Asian continent. The wars exposed the vulnerability of traditional economies that relied on closed trade systems and metal-based currencies. As Britain expanded its financial and naval dominance, neighboring countries from Siam, Thailand to Japan recognized the urgent need for economic modernization. Japan in particular learned from China's defeat. The Meiji leaders viewed the Opium Wars as a warning. Without financial and military reform, any nation could fall victim to imperial pressure. Thus, Japan rapidly established a central banking system, adopted the gold standard, and modernized its taxation and fiscal structures, all to secure monetary sovereignty. By contrast, nations that failed to reform, such as the Qing Empire and later colonial Indochina, became subject to foreign monetary regimes, where their trade and currency were managed externally. This period marked the beginning of financial colonialism, in which control over exchange rates replaced traditional conquest as the key to empire. The transformation of free trade and the ethics of finance. One of the most paradoxical legacies of the Opium Wars is the rise of free trade ideology promoted by Britain, yet built upon coercion. The treaties that followed the wars claimed to open China to free commerce, but in practice, they enforced one-sided economic liberalization. China's tariffs were capped at low fixed rates, depriving the Qing government of fiscal autonomy. Foreign merchants enjoyed extraterritorial privileges, meaning they were not subject to Chinese laws. The so-called free market was, in reality, a financial structure serving imperial interests. From a modern financial history perspective, this period offers an early example of how economic liberalization without sovereignty can lead to dependency. The pattern would repeat in later centuries through unequal trade agreements and debt diplomacy from the Ottoman Empire to Latin America. Yet, the contradictions of the 19th century also sowed the seeds for reform. By the early 20th century, China's intellectuals and reformers, such as Liang Qichao and Sun Yat-sen, began calling for the creation of a national banking system and a stable paper currency, the very foundations of modern Chinese finance. The enduring lessons of the Opium Wars. The Opium Wars remind us that financial history is inseparable from moral history. Economic systems reflect not only efficiency and innovation but also power and ethics. The manipulation of trade, currency, and debt can bring short-term profit, but at the cost of long-term instability and resentment. In the 21st century, as new forms of economic competition emerge, digital currencies, debt-based diplomacy, and trade wars, the echoes of the 19th century are unmistakable. The quest for monetary sovereignty and fair trade remains as urgent today as it was 2 centuries ago. Understanding the financial legacy of the Opium Wars is therefore not an academic exercise, but a mirror for our own era, one where global finance still shapes the fate of nations. Financial sovereignty and the legacy of dependence. The financial aftermath of the Opium Wars left a lasting imprint on the concept of monetary sovereignty, the ability of a nation to control its own currency, credit, and capital flows. For China, the loss of such control was not merely an economic setback but a structural transformation of its financial identity. During the 19th century, China's economy became increasingly subordinated to the mechanisms of global capitalism dominated by Britain and, later, other Western powers. The silver standard that had long underpinned Chinese commerce turned into a vulnerability. As silver depreciated in the late 19th century due to the global shift toward the gold standard, China's currency weakened, leading to inflation, fiscal strain, and a growing trade deficit. This financial dependency also meant that the Qing government's fiscal health depended on external conditions it could not control: bullion flows, Western interest rates, and the behavior of foreign banks. In effect, China's monetary system was integrated into a world order designed elsewhere. The spread of foreign banking and capital penetration, the establishment of foreign banks, notably the Hong Kong and Shanghai Banking Corporation (HSBC), the Chartered Bank of India, Australia, and China, and the Deutsche Asiatische Bank, signaled a new era in financial colonialism. These institutions provided credit and liquidity, but on terms that favored foreign interests. They introduced modern banking techniques, deposits, loans, bills of exchange, yet simultaneously eroded the traditional Chinese credit networks such as Qianzhuang native banks and Puhao draft banks. The result was a dual financial structure, one modern and globalized but foreign-controlled, and another traditional but marginalized. Shanghai emerged as the heart of this new financial order. By the early 20th century, more than half of China's foreign trade passed through its ports, and the Shanghai International Settlement became a financial enclave governed by Western legal and monetary systems. This system institutionalized dependency. Chinese revenues were collected in customs managed by foreigners, indemnities were paid through Western banks, and even government bonds were issued in London. Financial sovereignty had become an illusion. Comparative analysis. China and Japan's divergent financial paths. While China was trapped in a silver-based dependency, Japan took a dramatically different course. Learning from China's humiliation, Japan's Meiji government 1868 to 1912 pursued rapid modernization. It founded the Bank of Japan 1882, adopted the gold standard 1897, and cultivated industrial conglomerates Zaibatsu to channel domestic capital. By aligning its currency with the dominant gold standard, Japan gained access to Western capital markets on equal terms. This facilitated its emergence as Asia's first industrialized power and, eventually, its own imperial expansion. This divergence underscores a fundamental truth in financial history. Monetary policy is not merely economic, it is strategic. The choice between silver and gold, between dependence and autonomy, determined the fate of nations. Debt, diplomacy, and the architecture of control. The financial tools refined in the Opium Wars, loans, reparations, and monetary imbalances became templates for later forms of debt diplomacy. By the late 19th and early 20th centuries, China had accumulated enormous foreign debts, much of it under unfavorable conditions. These debts were often secured by pledging customs revenues or taxes on salt and land, essentially mortgaging national income. In 1898, for instance, China borrowed £16 million from a British-led consortium to fund military reform. The repayment terms ensured long-term dependency on foreign financiers. Debt thus became a soft instrument of empire. It required no troops, only accountants and bankers. The pattern would be repeated across the globe in Egypt after the Suez Canal crisis, in the Ottoman Empire's public debt administration, and later in Latin America under IMF supervision. The Opium Wars as a financial turning point in globalization. From a macroeconomic perspective, the Opium Wars marked the transition from regional trade systems to a unified global economy. Before the 19th century, the world's monetary zones, silver in Asia, gold in Europe, operated largely independently. The wars forcibly integrated these systems under British financial hegemony. This integration was not equitable. The New World economy functioned through asymmetrical exchange. Western nations exported capital and manufactures, while colonies and semi-colonies exported raw materials and absorbed debt. China's forced opening thus served as a prototype for financial globalization built on unequal interdependence, a dynamic that persists in modified form even in the 21st century. Continuities in modern financial power. The mechanisms of control developed in the 19th century currency hierarchy, debt leverage, and capital mobility remained central to global finance today. The US dollar occupies the position once held by the British pound, serving as the unit of account and medium of settlement in international trade. China's contemporary financial strategy, the internationalization of the renminbi, the creation of the Asian Infrastructure Investment Bank AIIB, and the Belt and Road Initiative BRI can be viewed as attempts to reverse this hierarchy. Just as 19th century Britain exported capital through private banks, 21st century China exports credit through policy banks and state-backed loans. Yet the same paradox remains. Financial power, when extended globally, always carries political implications. The Belt and Road Initiative, for instance, resembles the 19th century web of trade routes and financial outposts, except now, China stands at the center. Through infrastructure investment and long-term lending, it seeks to build an alternative circuit of global finance less dependent on Western currencies. However, as history suggests, the expansion of financial influence is never neutral. Credit brings not only opportunity but also dependency. Nations receiving Chinese loans today face dilemmas strikingly similar to those of 19th century China. How to balance capital inflow with monetary sovereignty. The moral dimension of financial history at its core. The financial legacy of the Opium Wars raises profound moral questions. Can wealth built on coercion ever be legitimate? Can a global economy achieve stability when its foundations are rooted in inequality? Financial history is not only a chronicle of instruments and institutions, it is also a record of values. Each treaty, tariff, and currency reform reflects a moral choice about who holds power and who bears risk. The rhetoric of free trade that accompanied the Opium Wars was underpinned by coercion. Just as some modern narratives of development aid or market liberalization conceal asymmetries of power, to study the Opium Wars financially is therefore to confront the ethical dimension of capitalism itself. In this sense, the Opium Wars are not relics of the past but mirrors reflecting the enduring tension between profit and justice. Financial innovation, when detached from moral restraint, can perpetuate exploitation under new guises, from opium to oil, from silver to debt. Conclusion: from silver to digital empire to centuries after the Opium Wars, the battleground of finance has shifted from silver bullion to digital currencies and algorithmic markets. Yet the central issue remains unchanged. Who controls the medium of exchange controls the world. As nations compete to establish digital monetary dominance through central bank digital currencies, CBDCs, or blockchain-based systems, the lessons of the 19th century remain strikingly relevant. Monetary technology may evolve, but the geopolitics of money endures. The United States' dominance through the dollar system parallels Britain's earlier command of the pound sterling. Meanwhile, China's push for digital renminbi and cross-border settlement networks echoes its centuries-old pursuit of monetary autonomy lost in the opium era. Ultimately, the Opium Wars were not only about opium or silver, they were about control of credit, confidence, and capital, the invisible pillars of empire. Modern financial systems still rest upon these same foundations. To understand global finance today with its crises, dependencies, and rivalries is to trace its roots back to Canton in 1839, where the first shots of monetary imperialism were fired. The story of the Opium Wars is therefore not only a tale of past empires, but a continuing narrative of financial power, one that still shapes the balance of wealth, trust, and sovereignty in our globalized world.